Hi traders, and welcome to the final technical analysis market wrap on Friday the 18th of December. So we've had a pretty big week of movement. The big majors that we were talking about last week have continued their advances, and the dollar index is really starting to sell off now. So we'll jump straight into the charts and have a look for some opportunities that might present today or early into next week. Alright, we'll jump straight into the Aussie USD. We always start with this one. The strength has really continued here. You can see that it's pushing up on the daily. It's making a really nice series of higher highs and higher lows. So this has been a really good one to watch and trade. So once it broke through this zone here, it's just been onwards and upwards. It's been a fantastic trade. The pink line that I've got here is very, very heavy resistance at on a very big time frame. So I'll take it out. You've got to go out quite a bit to actually really appreciate how strong this resistance is. But you can see right through here in 2015 and 16, it was very, very strong resistance. And yeah, way back here in 2005 and 6, it was also very strong resistance. So although that was quite a long time ago, you still have to really respect this level. You can see that it's had a very, very big move up. This is on a monthly chart, so yeah, it's a very, very big time frame. When you go back to the daily, you can really appreciate how strong this resistance is now. So yeah, we are getting separation from the 20 moving average. The best way to trade, a market that's doing this, which is obviously trending, which is what we want anyway, is to go down to the smaller time frames and identify the one that's going to give you the 20 pullback. So the 20 moving average is the most important pullback in a trend. All you have to do is find the time frame that's actually giving you those nice sequences and basically trade that and join the trend that way. You don't want to be jumping on a high. You want to be going back to the smaller time frames. So as you can see, although the daily has just exploded away and it's been really, really strong basically for the last 6 or 7 days, when you go to a 4-hour chart, it's basically given you many, many opportunities to get into this trade. Like you can see every single time it came down here and made these lower highs and lower lows, they were an entry point. Okay, so all of these are good entry points to join the existing trend. Remember, like I always say, trading is always the easiest way to trade because it's the easiest way to join in. But you need a good method to actually join the trend and join it in an efficient manner. So you can go to the 4-hour, you can see it's happening there. Even on the 1 hour here, even on a small time frame like the 1 hour, you can see you're getting really good pullbacks each time. And every time you get a 20 pullback, off you go and you can join that trend. But like I say, we know that we're approaching very strong resistance now. So, it may, get up there, might push just one more before it actually pulls back. I would fully think that it's probably going to come back to maybe not all the way to the 74, but it's probably going to come and test at least the 20 moving average at some point, and it's probably going to do that before it breaks through this resistance level. So keep an eye on that and go to the smaller time frames and look for maybe those roll reversal areas at that resistance and look for a potential bit of a sell-off and maybe trade it into the 20 moving average. That's what I'd be doing in the next couple of days on this one. All right, so the next one we'll have a look at is the US dollar CAD. Nothing but weakness here we have seen over the last few weeks, and it's certainly continued on down. You can see that it's broken down through every support level that we expected to potentially hold it up and give it trouble. Yes, it's traded in those ranges, but none of them have been able to stop it from falling all the way through. We can see that we've got a bit of a hammer candle forming here on the daily chart. So we can take it back to the smaller ones. We know this is very, very strong support here at the 127.20. So we're going to take it back to a smaller time frame and see if we can identify something. What we can see, you can see that although we have had some very heavy selling, it is starting to ease down a little bit. So potentially it could look for a bit of a revival. Maybe how far it goes, well, no one's going to really know until the dollar index sorts itself out. But it could definitely pull itself up from here and maybe have a little bit of a resurgence up into the 127.70 to 128 zone. You can see we've got a definite double bottom here. We've got divergence on the MACD. You can see that. So double bottom with divergence. You can see a good rejection candle. That's on the 4-hour. If we go back to a 1 hour, that same double bottom is in play. You can see that here. Okay, we've got divergence again. So it's got a little bit of work to do to actually play out. Of course, it has to get up and break the 127.70. That's where the neckline is, and that neckline coincides with support and resistance zone, which is a roll reversal area anyway. So it's got a bit of work to do to break through that neckline. No worries about that. But if it does break through it, it's got the very clear target here of 128.25, so another 50 pips above that, which is the ranges that it's been floating around in. So there are two ways to play this, really. You could go to the smaller time frames and look for a series of higher highs and higher lows and trade it to the neckline of the 127. So then 127.70 that is. Then you're trading in the direction of what the pattern could be forming. That's an absolute scalp, and your stop loss would warrant that move only. So only up to the 127.70. You need a stop loss below the recent lows. And failing that, you'd trade the actual pattern itself. You'd look for the double bottom break of the neckline, and then trade the distance between the 127.70 and 128.25. And you're basically, if you measure that distance out, it's going to be pretty close to where the next real, you can draw this up here. You can see this is where the first resistance point is going to be, and that will coincide with what the pattern is trying to tell us as well. So couple of ways to play the CAD, but it is the momentum is starting to shift a little bit on the bigger time frames. We saw that hammer candle right here on the daily, so if that continues on, we could easily see it getting into the 127.70s again. So potential scalping opportunity on this one, and maybe a pattern trade as well if it does break that zone. So we'll head on over to the dollar index now. This has just been in free fall. You can see that the whole week has just been a week of absolute selling. It's broken every level there is to break, really, that was going to hold it up. And it is fast tracking its way down to what was potentially the next real support, which is around that sort of 88.80. This is the level we've been calling for quite some time now. We thought that if it broke the 92, the 88 was where it was heading, and it looks almost set to get there now. You have to go back quite a while to actually see where this support actually lies, and you can see here on a weekly chart the support back here in 2018 was very strong at this level. But if you take it out even further, you go to a monthly chart, you can see how significant this level is again by the fact that it was resistance at the highs here in 2008 and 2009, which we know was around the GFC time. So it's a very serious level, this level of that 88.80, and it's looking like it's not going to want to stop before it actually gets there. You can see that the recent support there was in 2017 and 18, and it's fast tracking its way down there. How you trade this level, knowing that this is probably where it's going. Again, it's hard to trade when it's not pulling back to the 20, but like I said earlier on the previous currencies, when you go to a smaller time frame, you do get those opportunities that you're looking for to actually join that trend. You're very aware that it's going down. How do you jump in? Go to a smaller time frame and look for the one that looks the most respecting of the 20 moving average. Now you can see here the 4 hour is very respectful of the moving average. It's been doing so for a very long time. So even though the daily looks like it's in free fall, the 4 hour is coming down in a very orderly fashion. It's touching the 20, pulling back and down again. You can see you've got plenty of opportunities. Every single one of these touches was an opportunity to join this trend. And you could go even lower than that. And on the 1 hour, you can see the same thing happening, okay? You can see the 20 moving average, the pullbacks, and for the shorter term traders, you can jump in and trade the pullbacks to the 20. So, really good trading opportunities on this as well. We've got the longer term plan. It's going to take some serious reversing. I would be surprised if it reversed properly before it actually reached the promised land of the 88.80. But, it's just one to keep an eye on and just trade the price action on this one. We'll now take a look at the EURUSD. This one's just shooting for the sky. It's just doing all the right things. Once it broke that zone, it's just been upwards, off we go. You can see it came back, touched the level that we wanted it to. It's been a fantastic trade, this. I know a lot of people have been in this trade, which is really good. Same deal, the daily is a very aggressive trend up. So we do the top-down analysis, go down to the smaller time frames, and that's where all the opportunities lie. You can see, again, the 20 moving average has been the support base for this. This is why I keep saying that, trending is such a good way to trade. I mean, sideways markets are great as well, of course, when you're using the right instruments and the levels, but when a market's really trending, and these have been fantastic over the last few weeks, you get so many opportunities to actually join the trend in a very safe manner at very key levels. And you can see here, the 4 hour has done that for us. You can go back down to a 1 hour, you're going to get the same thing. You can see that all of these touches are basically entry points to go long. So whether you go one or many positions in, you can scale into these trades. That's the good thing about trend trading as well. They're really easy to scale into because you can basically lock in profit as you're going up and add new positions. And by the time the trend starts to waver, you'll find that you can actually have quite a few contracts going long and actually have no extra risk than you normally would have in the first trade. So they're very good to scale into. and when they're showing signs that they are really behaving themselves and moving up in a very orderly fashion, which is exactly what we want, it makes it really, really easy to trade. So I know a lot of people have been in this. I've got a lot of emails, which is awesome. Where it's going to stop, well, look, we have to go out a fair bit to actually see where the real resistance is next for this one. Back over here is, the 124 sort of 17 area. That was resistance back in 2017 and 18. So, again, a long time ago, it's broken some very, very key zones. This is what happens when you get a key break of a zone that really hovered there for the best part of a year. It's onwards and upwards. So it's still got a little bit to go before it really reaches that zone. You can see this was also support. So there's really a range here where this was carrying on. This is a weekly candle. So you've got basically, 3 or 4 months of action here where price was failing to go higher or lower. It's fast approaching that zone now. It's just broken into it. That 122.50 and 124.20 area was a very, very key zone back there. And it may well prove to be a key zone for it now. So look for it to maybe break up a little bit higher and maybe come back and retest a 122.50 from above. It's a long way away from its 20 moving average now. So, it's going to come back to it at some point. But, whether it's going to do it in the next couple of days, and really give us time. The problem with where we're at now is we're getting very close to Christmas, and the last few days of the Christmas week and also the New Year's week, the week between Christmas and New Year's can be very, very volatile. So you've got to keep the trades fairly short in that period. Keep them scalpy. Look for the smaller time frames and go for good solid entry points. And have your stop losses nice and tight because it does get a bit volatile. But we should still have a few more good days of trading. So trade the patterns, trade the price action, and look for the pullbacks. But again, this is probably reaching an area where it's probably due for a bit of a correction. So look for those changes of trend on the smaller time frames, a series of lower highs and lower lows, and just trade what you see, really. All right, so the last one we'll have a look at is gold. We can see here that this has been on a real run now. Like you can see that we've got the series of higher highs and higher lows, trading well above the moving averages, and we got that cross that we were looking for. Quite a few weeks ago now, but it's certainly there. Earlier in the week, you can see we had the breaks above the moving averages on the 4 hour. The patterns were here. You can see over the last few weeks, the changes in the trend have certainly kicked in. It was definitely in a downtrend over here, but over the last few weeks, we've got that change of trend now. We've got a series of higher highs and higher lows on a pretty significant time frame. You can see the daily has been really, really strong now. It hit that resistance point that we would fully expect. That was pretty strong level at the 1895 area. It's sold off a bit there from there now. Look, whether it breaks through that level, only time will tell. You've got to look for the smaller time frames for the clues here. The 4 hour needs to pull back a little bit and then maybe retrace. If the 4 hour comes back to the 20 moving average, you could probably look at taking it long again into that 1895. It doesn't look like it's going to probably hold it. I mean, it looks really, really strong gold, and it's going up as well as the S&P 500 is going up. So both of them are going up in sync, which is not that common. So it is interesting to see them both go up in sync. But this is probably the preferred trade because I think there's a bit more length in this one. If it does break through the 1900 and consolidates up there, well, we know it can push fairly high from there, and we can get some good trading opportunities. So this has been playing the game. Just stick to the smaller time frames once again. Keep the price action at the forefront of your trading plan because that's what's going to tell you what's going to dictate the next few days and into next week. So good trading all around, really. Like everything is moving in a very orderly fashion and providing us some really good scalping opportunities and also joining some longer term trends that are establishing. So I hope everybody's had a fantastic week's trading. We've had a really, really big year. As you know, it's been a tumultuous year for many, many reasons, but the trading has been good. We've been lucky enough to have the volatility in the markets, and it looks set to continue. I think we're going to hit 2021 with some very good established trends now on some very, very key majors. So I think that's going to give us some really good trading opportunities early in the new year. So we look forward to actually starting that. So I hope everybody has a fantastic weekend and Christmas. Again, this is the last one for the year. We'll kick off again pretty early in January with the Friday wrap once the market starts to settle down. But until then, have a fantastic Christmas and New Year, and I look forward to seeing you all in 2021. Thanks, everyone.